Kitco News special coverage of the AIBC Summit is brought to you by Coin Payments. Crypto payments made easy.
Why exactly did FTX fail, and where are we currently in this crypto winter? When will we see a recovery? These are some of the major themes we'll be discussing with the next guest. Crypto Megan, that's how she goes by, but your real name is Megan Nilsson. Welcome to the show. You are an educator of cryptocurrencies. You're an advocate for women in Web3, and of course, you are a consultant in the space as well for high net worth individuals. Pleasure to have you on the show.
Thank you. Thank you for having me. I absolutely love what you guys do. I've seen the stories you covered, and you do an excellent job at getting down to what's going on. And so I'm happy to be here.
I appreciate it. You're a very knowledgeable person. Just speaking to you offline. We'll be talking about the gamut of the crypto industry, of course, and your work and advocating for women in the space. But let's talk first about FTX because that's making headlines right now. You've studied this a lot. There's a lot of angles we can cover. I just want to start with a tweet by CZ that he published last week, actually, and he summarized it. He was sniping FTX indirectly with this tweet. He says, 2 big lessons. Never use a token you created as collateral. And number 2, don't borrow if you run a crypto business. Don't use capital efficiently. Have a large reserve. Binance has never used BNB for collateral, and we have never taken on debt. All right, so let's just break down what happened here. And I'm curious as to why you shouldn't use a token as collateral. In theory, that would be fine if you're not over levered, right? But anyway, I'll let you explain the whole case here.
Yeah, sure. Let's break this down because this is on everybody's minds, and I just want to try to simplify it as much as possible because I think that's what people need right now. So CZ, I've collaborated with Binance quite a bit. I love the team. I think it's really interesting what they're doing and their vision of the future. And they actually say, CZ has said that his vision is a decentralized world where exchanges don't even custody people's money because they're not meant to be banks. And that's the whole issue that's happened with FTX is that they're running FTX like a bank, a fractional reserve system. And banks are allowed to leverage up to 90% of people's deposits. And he's been running his exchange like that. And when you build a company on leverage in crypto, so he built this company on leverage based on his reputation and being too big to fail all the way up to the highest ranks. Kevin O'Leary was his spokesperson based on his reputation and got all the way there. And he did this because he wanted to take over the competition. So when you build a company like that and not, with a long-term vision and community in mind and just a shotgun approach, things go wrong. And so he did this whole thing that's called the flywheel approach. He creates a token out of thin air, right? He prints money just like the Fed and the US dollar. You can print the money. There's no limit to it. Then he pumps the token. He shows the gains to investors on the balance sheet, raises money from the investors, and then takes that money from the investors and leverages it to buy more companies. And so you can see that this model is in essence, a Ponzi scheme that works in a bull market. But when bear market comes and certain prices are hit at liquidation price, in this case, it was around $22, hence the tweet from Caroline from Alameda Research reaching out to CZ, begging him pretty much to buy those coins over the counter because he said he was going to sell all of his positions in FTT. If that happens, then the whole thing collapses. And it's just so wrong. He misappropriated about $4 billion in users' funds alone to try to save his failing hedge fund. And that's just so unethical. And the problem is a bank, when they have a bank run and the bank can't produce the money that the people are demanding because there's too many at once, they get bailed out by the US dollar. But exchanges aren't backed by the US dollar and they don't have proof of funds as of now. So there's no transparency there.
Yeah, let's go back to the banks. So the banks, the traditional financial institutions, they're regulated. They're mandated to lend up to a certain ratio of their total deposits, like you said, and they have capital reserve requirements, but they're still allowed to do this. So technically, it's not, well, I could argue, unethical, but it's not really wrong to lend out funds to another party, as long as it's written on the contract, as long as it's transparent, and as long as it's regulated, right?
I would argue that it is very unethical because in this case, he's taking users' funds and leveraging it. Pure gambling. The only way this works is through this Ponzi scheme. And the banks do it at least backed by the reserve and the US dollar. Sure. So if something goes wrong, they can get bailed out. But if something goes wrong here and he's saying, we don't do this, we've got a runway.
Well, Binance was supposed to bail them out.
Well, but okay, that's another story. And
Yeah.
I honestly don't know that he ever even intended to, because imagine Binance doesn't run in the regulatory environment in the US.
No.
And Sam Bankman-Fried, I mean, it came out that he's involved in a lot of lawsuits. Binance would never take
I
that
know
on.
we're skipping, we're jumping around here, but like, what was Binance's rationale or incentive to even buy out FTX or consider it? Their excuse for backing out of the deal was that they looked at the books and there was too much stuff they didn't want to own, too much debt. Was that the real reason, Megan?
I couldn't say the real reason, but I could speculate that partially probably to smoke him out, to expose what was going on, because it wasn't right, it was unethical, it was wrong, and people trusted their funds with him. I mean, if it is true that Binance has a 10-year runway of cash reserves, I mean, that's how an exchange should operate. It just totally blows my mind, and even the biggest holding by Kevin O'Leary himself. Now he's taken all his funds and gone to Canada and said, forget this, I'm not getting involved until this is regulated. I mean, I really think that because he had to have known they were in legal issues at that point, and Binance could never take that on because they're not in that regulatory environment in the US. So I suspect that partially, some of it, like Elon Musk, right? He went in and he took a look at Twitter and he said, there's too many bots, this thing is awful. Right? And then I don't know how the contract was, whether or not he could back out, but that's what I suspect that Binance had kind of been doing.
CZ is now positioning himself as the savior of the cryptocurrency. You said just now that Binance is one of the better exchanges. Do you buy that image?
I don't think it's more of a question of whether or not I buy it. I mean, I've been using Binance since the beginning, and they have high liquidity. I've always been able to get it out. It's been the best trading platform for me and buying platform for me up until now. So it's not to say it's untouchable. Nothing's untouchable. But the way that they're building, the way that they're actually focusing on community instead of throwing money around on ads. I know they signed on Cristiano Ronaldo yesterday.
Yeah.
So that was probably an expensive acquisition, but they didn't throw money around in the bull market like Crypto.com, like FTX, and not to say anything about Crypto.com. I don't know about what's going on with them. But when I see these kind of red flags, it starts to make me wonder, where does the money come from? And there was one interview with one guy from one of the news networks, and he was talking to Sam Bankman-Fried, and Elon Musk said it too. He said he couldn't get a clear answer about where the funds came from. Red flag, right?
Well, yeah, so let's talk about that. We were talking about the mechanics offline about how the funds are transferred. As a user of FTX, could I not see that my funds were being used on Alameda Research? Was there not, because when you transact with cryptocurrencies, with Bitcoin, for example, that transaction or movement should be posted on a ledger. Would I not see that the Bitcoins that I own are being moved around?
Right. I don't think it's so apparent as of right now because it's hard to track exactly who it's coming from and where it's going. I mean, the reason why we knew that the 500 million in FTT token was transferred to Binance Exchange was from CZ is because he came out and said it. It was pretty much the tweet that triggered everything. I'm selling my FTT. Something's up on Alameda Research's balance sheet. I just want you guys to know we're not trying to affect the market. We'll do this slowly. Right. But then that's what triggered this whole cascading effect. And Sam Bankman-Fried came out and he had the Lehman brother moment. And he said, don't worry, we have enough capital reserves, everything will be fine. And less than 24 hours, everything was done. And so it was faster than Lehman because Lehman took 3 days.
Well, okay, well, that's not really a record you want to beat.
No. It was the craziest thing I've ever seen in crypto history.
Yeah.
I mean, it's the year of that could never happen.
What happened with Lehman was contagion in the financial sector, and then Dodd-Frank happened afterward to regulate. We'll talk about regulation in the crypto sphere, but are we seeing that right now, a Lehman moment where other exchanges are about to topple like a domino effect? BlockFi was next.
Yeah.
A lot of things aren't exposed. Salt, a lender, just went under.
There are 134 companies, to be exact, that are exposed to this. And obviously, we mentioned Solana. We can get.
What do you mean by exposed? Yeah, we'll talk about Solana.
That had some kind of exposure to FTT or some kind of relationship with Sam Bankman-Fried or investments or some kind of exposure there. So Solana was, I think he owned 10% of the whole token supply, 10 or 15%. That's a lot. That's a lot on a market cap like Solana. And so it'd been experiencing heavy sell pressure, and there's all these YouTube influencers coming out saying, will Solana go to zero? I mean, you have to imagine that a lot of people that hold that token or if he invested in that token, they're going to want to get some of their returns out of that and maybe have heavy sell pressure. I know about $1 billion was unstaked the other day, is making its way to the open market now.
Yeah.
So I do believe, not to spread FUD or anything because I'm so optimistic on what's going to happen in the future, but I think we're in for some some little bit of rough times as the story develops that more and more people were involved.
Solana, let's talk about Solana briefly. We'll talk about the technicals. I actually talked to Sam last year on my show, and I asked him before all this happened a year ago, and I asked him specifically, which cryptos do you think could survive a coming winter? This was before everything crashed, and I said people thought at the time, that perhaps December was the last bull run and things were collapsed. Suppose they do, what would happen to, what coin should people invest in? He touted Solana, obviously. And he said that there was a lot of use cases for Solana. And I asked him, could Solana one day become the next Bitcoin? What is the next Bitcoin, Ethereum, so on and so forth?
Yeah, I don't know for sure, but what I will say is that if you look at what it would take to have, say, 1 billion people use cryptocurrency, to have 1 billion people use blockchain infrastructure, right? If each one of those is sort of using it in the same way that we use social media or finance today, that's going to be creating probably millions of transactions per second for the blockchain. And you can see this if you just look at the transaction throughput of current large financial, social media, or basically any large online application. And, from that perspective, one thing that I've thought about a lot is what are the blockchains that could scale to that level, that could scale to millions of transactions per second in a composable native way. I think I've been on the record a lot saying that I think Solana has a real shot at doing so.
Perhaps, first of all, do you agree with that outlook? And perhaps the image of Solana was tied too much to one person, and maybe suppose he was right in the sense that there are actual practical applications to Solana. One could see that it's undervalued. I'll let you answer that.
So I actually bought Solana on its run on the way up because I noticed it pretty early on, before it was like the hot coin of the the month or the year, and I invested in it around $24 and sold it around 200, I think it was. So I saw the run up. I realized that everybody was rallying behind it, and it has a whole ecosystem developed around it. I mean, people love the Solana NFTs, but it goes down a lot. I'm kind of torn on Solana, to be honest. I like the community. The developers seem really solid. I mean, the technology is pretty good from what I've heard from experts that have delved into it, right? From coders, but I don't know, I don't know that I think it'll survive because of the ecosystem that's been built around it.
Fair enough.
But I don't hold it anymore. I did liquidate my holdings on that.
Let's talk about exchanges now. More broadly speaking, we're talking offline about how people can protect themselves and the trust that has evaporated when it comes to trust in centralized exchanges. How can people protect themselves right now? If I had to go on a centralized exchange, I don't know if I'm going to get my money, right? Is the question I'm thinking.
Yeah, it's a tough question to answer because I know a lot of new people have been burned, even people in my own family. It's like hardest to give help to your own family because they don't listen to you as many other people would. But I know a lot of them feel like, you see, the whole crypto sphere, it's a Ponzi scheme. We told you, we're out, we're done. This is the end. And so I think we're going to have some work to do to repair that trust, but it's always back to the principles. And just on a side note, for example, before when the bull run was in full-fledged, I was at Bitcoin Miami, and a rep from Celsius came up to me and he was like, hey, you should put some of your clients' high net worth portfolio into our protocol, get them a good return. Yeah. And I told him, I'm sorry, but I couldn't do that because I don't help them put their funds in a centralized entity where they can't have control of their keys because anything could happen to you. And he rolled his eyes at me and walked away. And 3 months later, they went bankrupt. So it was, for me, sticking to my principles and what I say. It's not your keys, not your crypto. I'm involved in some DeFi protocols where I have control of my funds, that I can take them out whenever I want to. And I use exchanges as what they're meant to be for, unless you're a trader. And that's to onboard and on-ramp and off-ramp the fiat, and to buy whatever you need to buy and put it onto your wallet. So that's the best thing people can do right now to protect themselves, is not keep their money on any one exchange for any extended period of time.
I'm just going to go back to FTX for a minute. So nobody at any point suspected that funds were being used for trading at Alameda Research?
I think people did. I think red flags were going off in certain...
Because I've read people even at Alameda did not know where the funds came from.
I think within the actual entity, and I listened to a lot on this and did some research, and I do know one professional that came out and said, Later on, she asked not to have this public, so we don't talk about who it is, but she said, Sam Bankman-Fried was responsible for the Luna collapse. And I don't know whether or not that's true, but if it is, then this has been going on for a long time. And I did hear that when the company first started, he really urged his employees to invest. Said, you're going to get a great deal before this goes onto market. You all should take advantage of this. And so I don't think any of them knew, except for a small, tight inner circle at the top. And it's sad because a lot of them put their savings into this. I mean, employees that felt that this was going to be the next big thing and they were excited to be on it because he was pumping it up by... I read this from actually an employee who put out some letters and said, we all got newsletters in the beginning who was really urging us to invest in him and FTT, and I don't think they knew.
Mm-hmm. Some of them got paid in FTT, I remember?
Yeah, got paid in FTT and invested in it, early investors. Mm-hmm. So they got a really good deal. Mm-hmm. And he sold it that way. So, you have to wonder, some people say, did he do this intentionally or did he get caught up in something he didn't understand?
That begs the question as to whether or not he's going to get arrested, whether or not any of this was criminal or just negligence. Well, negligence in itself is kind of criminal activity depending on the context, but stupidity isn't really a crime. And I've heard arguments that maybe it's just a bunch of kids running a billion-dollar company. They had no idea what they were doing. They weren't intentionally trying to deceive people, although there was probably evidence that they probably did. What's your take? Is he going to jail?
I find it hard to believe that it was unintentional. Okay. I mean, allegedly he built a trapdoor, to where he was funneling the funds, using users' funds to prop up his own company and to invest in FTT or whatever it was he was doing, leveraging. On a side note, there's one quote by an anonymous source that says, if you don't know about leverage, you know nothing about crypto at all. Because this has been going on for a very long time and it's just now getting exposed on a very high level. And to answer your question about whether or not he'll go to jail, he donated $5 million to Biden and I think like 20 million or 40 million to Democrats. So a lot of people have been saying that it's like Goldman Sachs, that he's paying for protection within the government. And Gary Gensler was involved with him. Rallying for that. The whole reason why this came about is because Sam Bankman-Fried was rallying for regulation that would really benefit him, and it would kind of isolate the rest of the sector. So he was trying to monopolize.
One more question about this, and I'll move on. What's your favorite conspiracy theory right now circulating this whole FTX debacle?
Oh my God, there's so many. We went down the rabbit hole this morning on Twitter Spaces. I mean, it's just, I think it goes really much deeper into the government than most people want to acknowledge or admit. Yeah. That's what I'll say.
Do you believe that he was an SEC plant?
Okay, that's another one. Like this whole thing was spun up so they could step in and over-regulate. Yeah. I don't know if I believe that one. No. I think I believe more the first one there, that he got involved in a higher level in the government and got them to rally behind it. And
well, let's talk about regulation now. If you're Gary Gensler, what would you be thinking?
Fuck. I mean, they've deleted pictures with him, not Gary Gensler himself, but people within the government. So
pictures with Sam Bankman-Fried. Okay.
Yeah. I mean, he made it. It reminds me of a case in Spain. Probably most people don't know about this, but I've lived in Spain for many years, and he's called Pequeño Nicolás. Like Little Nicholas, it means. And it was this guy that literally scammed his way to the highest levels of the Spanish government. And so anyway, this stuff happens. And people, what they always say is, do you trust human or do you trust code? Okay, we need to be somewhere in between. But the whole problem is giving people loans and leveraging positions based on their reputation. Too big to fail. Nothing could ever happen to him. Mm-hmm. And it's not that way. And that's not how we should approach this. And now the initiative of Binance for every exchange to publish a Merkle Tree, proof of funds, I believe is a good first step in getting that transparency out there. Although then you have the, alleged recycling of funds between the exchanges to kind of scurry around to get those proof of funds. So
maybe he'll be like Frank Abagnale from Catch Me If You Can, that movie, Leonardo DiCaprio. He'll be hired by the government to consult them on fraud cases. And I don't know.
I know his plane, it was like the most tracked jet ride out to Argentina. Who knows if he was on it. Now supposedly in the Bahamas.
You're telling me about the Merkle Tree offline? What is that?
Yeah, so the Merkle Tree is basically a way for the exchanges to have proof of funds audited by a third party, a way to make them more transparent, to make it the simplest version possible, for them to show that they have the proof of funds, that they actually have those reserves in their exchanges, and that it's transparent in that way. Mm-hmm. So, good first step.
What is the next step for regulators, you think, after this? What is the first thing that you're going to see coming out of the SEC or the Department of Justice? What changes are they going to make?
Yeah, so on a side note, I really like Kevin O'Leary.
Nobody knows. They're just speculating here. Yeah.
I really like Kevin O'Leary. Is wonderful. I reached out to have him on my podcast that's launching next year, early next year. And I like his vision of this because it kind of reminds me of, there's a show on Netflix called Playlist by Spotify. And it's like when the free music downloads started, it was called Pirate Bay. I don't know if you ever used it.
It was a long time ago.
I mean, I feel like old, I guess,
no one's talking about old, but yeah, it was one of the first pirating sites. Yeah, I remember.
Exactly, yeah, and you would download the BitTorrents and you get that music.
Oh yeah, that brings back memories. Yeah.
Yeah, and this is amazing. You should see this show. And so because that for me kind of symbolizes where we're at in crypto right now. It's kind of like a movement, and everybody's like, yes, freedom, we got this. We want all the control. We don't want the government stepping in. But there then comes the issue where when these new people come in and they get, wrecked, to say it like that, they get messed up by people who are bad actors, then the government steps in and says, I need to regulate. And so now it's kind of like we need to reach a point, an intermediary point, like when Spotify came along. They were kind of the revolutionary people in bridging the dinosaur record labels with the new way of doing things, just streaming music for free. And I think that's now where we're going to try to head in the crypto sphere. We're trying to reach a healthy medium. And so what I think would be best for the market is that they regulate stable coins first, and then make them be back-to-back, one-to-one with the dollar. And one of the things Kevin O'Leary says, which is really pretty crazy to think about, is, once that happens, the Saudi, the like oil and the sovereign wealth that's in the UAE, for example, they are bringing in $250 million a day, and 0% of what they own is in crypto. 0, because it's not regulated, and they won't touch anything that's not regulated in the US market. So imagine when they do, the money that's going to come pouring in. And here we are, $2 trillion and something of a market cap. We're nothing, and we don't have that liquidity yet. So once that liquidity comes in, it'll help stabilize. It'll be better for everybody. So I think that if they regulate those stable coins, that would be a good first step as well.
What's happening with people on exchanges these days? I don't know if we talked about BlockFi. It went under. So are your clients, and we'll talk about your work, but are your clients pulling money out of exchanges right now? What are you hearing from people that you know? Is there just an exodus of capital?
I mean, I have instructed my clients, they have always known to take their money off exchanges. Like I said, I don't know if we've discussed this yet, but one of them said I had a fundamentally different view on security than him, and he's a super high net worth individual. So I just remember, because I told him you have to do this, and it sounds crazy to a newcomer, but I take it seriously because I understand the risks, and many people don't, because they're just new to the space. They don't know. They just jump right in without really kind of researching. And so I instructed them. We also use a broker, an OTC broker, because then we don't have to even deal with the exchanges. So there's a lot of benefits to that, and always self-custody.
First of all, FTX is not the first exchange to defraud people. Quadriga was another famous case. There's a Netflix documentary about it. Hundreds of millions of dollars disappeared overnight, and I think the guy fled to Mexico. I can't remember where he went. But this is like, they literally, this is like movie material, which they did.
This week has been movie material for sure.
They're making a new documentary about this as well, I think. But it leads to the question of the sentiment in the market right now. Are we still bearish right now, Megan? Has this made people more bearish, or perhaps this signals the bottom? What do you think?
On the charts, and I like to look at charts and not just sentiment, and then combine the two and kind of come up with a thesis, but the charts have been showing for a long time that there was already a potential bottom. And that's what I've been placing my bets on, and that's how I've been acting. I've been laddering in at these areas because historically, we're in the golden zone of buying opportunities for Bitcoin. And so for me to try to time the bottom, or maybe there could be one more leg down, or another flash crash down to 13.7, which is the strongest support level in Bitcoin history. Maybe there could be, but what does it matter to me if I've got a long-term mindset and I'm in this thing for years to come? I have more of a set it and forget it approach for my clients. And this is now for me an opportunity to buy those assets at a cheaper price, to set it and prepare for what's to come. Which is this massive influx of capital when we have regulation. And so to answer your question about the sentiment, I think the sentiment in the mass market, the retail market, is horrible, because I know that because I'm in touch with them. But the inner Web3 circle, like I told you, we were on Spaces this morning, and without a hitch. These people, they're rallying behind this movement harder than ever, and they're still here.
Okay. So you said 13.7K was the strongest support level in Bitcoin history. How did you come up with that conclusion?
By the monthly chart, so the most touches of support and resistance on the monthly chart. There's a lot of historical value there. So when I'm trying to to discern like where could we go to, where could we fall to if we did have another crash. One of the other points that it's called the 618 golden Fibonacci.
Yeah.
It's like the biggest support zone that Bitcoin likes to retrace to in these kind of markets, I believe was around 11,000. So, well, I mean, if we did have some kind of a flash crash down to that point, I would consider it an excellent opportunity, and that's what I'm doing, and I'm planning on going forward in that respect, that regard.
Speaking of technicals, what was interesting is that for the longest time, Bitcoin held a very close correlation with the NASDAQ index. Over the last couple of months, the NASDAQ continued to fall, whereas Bitcoin just stayed flat around current levels within a range. Why do you think it decoupled?
Well, I wouldn't even reference this. I wouldn't call it a decoupling yet. I think the momentary decoupling, if you could call it that, it's very, very correlated to the dollar, the DXY, the DXY, the dollar index.
Okay.
And so when the dollar pumps, Bitcoin suffers, and when the dollar dumps, generally Bitcoin goes up. I mean, it's risk on, risk off. And if they're getting better yields in the bonds and the treasury notes, then Bitcoin is still a risk on asset, even though it's not meant to be, and in the future it won't be.
Why won't it be in the future?
Because it's meant to be a store of value, Bitcoin. It's more like the digital gold. It's a portable digital property. So the other altcoins, they're like softwares. They're a little bit different because they're not completely decentralized. I mean, originally Satoshi envisioned that Bitcoin would be a peer-to-peer payment system, but there are many other coins that are much better for that because they're much faster, much more efficient. So Bitcoin, because it has a limited supply and because of the security behind the chain, I mean, it's an excellent store of value.
Do you think Bitcoin can ever retrace $69,000, which was its previous all-time high?
Do I think it could ever reach that?
Yeah.
Absolutely.
I asked that because some people said it'll never get there again.
Oh man, no way, no way. I mean, I just met Tim Draper. He's a billionaire investor, big backer of Bitcoin. I met him in a Web3 Summit. He's going to be on my podcast as well. And his projection is still 250,000 for after regulation. I mean, Cathie Wood is predicting 1 million. And it's a funny thing, if you look into Arthur Hayes, he used to be the CEO of BitMEX. He was in a little bit of a scandal, but his viewpoints on the industry are incredible. And he explains this thing called yield curve control. And so it's basically like what happens when the whole system gets out of whack and it breaks and everybody is flighting somewhere else. It's kind of a complicated thing, but if you look into that article, it's really interesting because many professionals predict these kind of high numbers at some point in the future. It doesn't matter when. That's what I want people to understand. It doesn't matter when this happens. The impatient money is always transferred to the patient.
So I think what people are wondering now is indicators for a recovery, right? Some people have told me the Federal Reserve needs to stop raising rates before risk assets like Bitcoin recover. Some people have said that the recession needs to subside and the economy needs to improve. What do you think? What's the next trigger for Bitcoin to rally, you think?
I think those conditions are really important, obviously, because like back to what we said, it's still a risk-on asset. And tech stocks and all of that suffer during these market conditions. It's the first bear market for Bitcoin that's coupled with a macroeconomic bear market.
Sure.
We've never had that before. But I think the main catalyst is the regulation.
Do you think institutional adoption will continue upward or wane following this FTX incident? I mean, people have told me that Bitcoin's latest push to new all-time highs last year was because of so many new institutions adopting Bitcoin, hedge funds, pension funds buying it, perhaps even. And now that this happened, institutions are probably scratching their heads and wondering whether or not this is still a safe sector to invest in.
Right. Yeah. I think smart money is definitely going to continue to invest. Okay. In fact, on-chain data shows that it's one of the biggest accumulation periods in history for whale wallets of Bitcoin. So smart money will definitely continue to invest. As far as institutions, they may want to wait until regulation, but the ones that do wait, they're going to miss the whole run up to after the regulation.
Sure.
But I don't know whether or not it's even possible for them to invest without that regulation. But if it is, man, they've got an edge. Yeah. That's the way I see it.
Tell us about your work in the Web3 space, particularly for women. You're an advocate for women in Web3. Tell us about that.
Yeah, so just a brief story about how I consult for high-end companies and investors and celebrities too. And many of those are middle-aged men who are the CEOs of their companies, they graduated from Harvard, hedge fund people, and they don't understand crypto. And so they need help. They need help getting involved. They need help doing it in the right way. But one of the things that I decided to do, because all my lectures were mainly predominantly male, I would take their significant others aside or their wives and say, hey, look, this is also about financial independence. You should definitely look into this. There's such an opportunity here, not only for that, but also to develop a skill in Web3, for you to start stepping up and creating something of your own. And they look at me and they throw their hands up like this, because that's the signal for me, like, oh, it's not getting properly diffuse the message, right? Or message out to people. And they say, I don't do tech, I don't do finance. I said, no, give me 30 minutes. Let me explain this to you. It's so much deeper than that. You don't have to have that background. You can learn about this. And when they start to listen and their face lights up like, wow, this is incredible. And I saw that and I felt like I needed to do this world tour, because I need to show women that they can have the courage to step up in a predominantly male-dominated world and take their space here.
I did a degree in finance in Canada at McGill University, and I remember back in my finance classes, even back then in college, there were relatively few girls in my class relative to men. So this dominance in the finance sector started at the educational level, whereby my female colleagues classmates just weren't interested. Why do you think women aren't interested in finance as much as men?
I think that maybe they're a little bit more risk averse by nature. And also, when you think about high level positions, CEOs and senior level executives, I mean, women, they haven't had that place in history as much as men, obviously. And when they get their shot, I feel like they think, I got one shot. I can't mess this up. I'll lose it all. I think they're afraid of failing because of that. And men don't have that same mentality. But on the flip side, I think women have a much different perspective when they invest than men. And also when they run a company. And we haven't had that diversification at the tops of these companies in the iterations of Web 2. And so I think it's going to be really cool to see how we transition in society to this new model where women are filling those places. The CEO of Bored Ape Yacht Club, which I'm a member of, and many people perceive it as kind of like a boys' club, is a woman, a Latina woman. Yeah. So you would never imagine that, right? Like you would never imagine Nicole Muniz. She's a friend of mine, and she's really, really cool, and she's filling that role amazingly. Yeah. So. I've
heard the argument that it's perhaps because women are thinking about raising a family, and so they don't want to be in a career where they're working basically 7 days a week. But then I know plenty of girls in law, and that's the same thing. So I don't think that argument holds. What would you say to a girl entering college that perhaps Web3, perhaps fintech is the way of the future, and perhaps she needs to study it ASAP?
Yeah. Well, first of all, to what you said before about women having children and worrying about their career, I went to VCon last year, a couple of months ago in Minnesota. And Lisa Mayer, the founder of Boss Beauties, was sitting on the stage with her newborn baby. And she was saying, no investor would invest with me because I was pregnant at the time. And I pushed through, I did this, I got the funding. Yeah, and she goes around with her baby on tour, and it's absolutely amazing. I mean, it's a new generation. It's definitely a new generation of women coming out right now, and it's really incredible to see.
But going back to my question, so what would you say to a girl that perhaps is looking at the space and convince her to study it, learn it, enter the industry?
The world is changing and the system is changing. It's going to be an entirely new dynamic. And back to the Spotify, the Netflix show, Spotify playlist, there was a scene where this one major lawyer, woman lawyer, who's at the top of her firm at the time, she was like a music royalties lawyer. And Spotify approached her and said, hey, come be a part of this revolution. Come be a part of this new way of doing things. You can be at the top and you can make decisions, because she was kind of shut out from the top of the board because she was a woman, in my perception. And so she took a risk. She took the path less traveled by, and it benefited her greatly. And then she went on to do amazing things. She can actually create. She can have a say in this new dynamic. She can lead the initiative. So I think Jeff Bezos said it too. When you take a chance on a new technology or something so nascent that it's this volatile and nobody understands it, I mean, you have a chance to literally step in and do whatever you want with it. Make it your own. Be creative. Take that top level board seat and see into the future instead of working toward getting a job in areas that are going to become obsolete. I think it's a chance for them to establish themselves in this new era where they can really do amazing things.
Last question. Which areas will be obsolete? In every generation, there are jobs that no longer are required or needed. A couple decades ago, alchemists were a thing.
Yeah.
What's going to be obsolete in 20 years?
Can I say banks?
You can say whatever you want.
I mean, actually, Charlie Munger, Warren Buffett's right-hand man, he said inflation is the death of all currencies eventually. And it's what happened actually with Germany and the whole transition into power with Hitler and stuff. It actually kills the economy and it brought down the Roman Empire. I mean, it does a lot of damage. And he says that he predicts within 100 years the dollar will be dead. And regardless of whether or not that's true, what I know will be obsolete are the middlemen. The middleman will be obsolete because artists are now getting their royalties through different formats, through NFTs, directly with their consumers, and there's no need for the middleman. And in fact, for example, I did a Spaces this morning with Scott Page from Pink Floyd, and they told the story about Deadmau5, where he was just starting his career and his record label, was in charge at the time. And he got the opportunity to have one of his songs on an Adidas commercial, only for $11,000, but it would have made him super, super famous and blown up his music. His record label shut it down. And so he had no say in that, and that influenced his career forever. So these middlemen, these people who dictate how everything runs and take most of the money, they're going to become obsolete, and they're going to have to find jobs and find ways to now transition, or they're going to die, just like Sony. When they finally decided, okay, he stops in the show and he has this moment, he says, it's a freaking digital jukebox. Oh my God. Like, he had to move because the people's vote was so strong that he couldn't continue operating the way that he did.
Well, fantastic talk. And where can people find out more about your work and follow you?
Yeah, I'm on Instagram, it's Crypto Megan, also Twitter, Crypto Megan. YouTube, I'm planning on revamping that completely, and I'll be launching that podcast with celebrities and industry leaders in about January time. So.
Well, congratulations. I look forward to that. And Crypto Megan, thank you for coming on the show.
Thank you so much.
And thank you for watching Kitco News. I'm David Lin. Stay tuned for more, and don't forget to subscribe.
Kitco News special coverage of the AIBC Summit is brought to you by Coin Payments. Crypto payments made easy.